Hey, trucker friends, let's talk about the difference between a tax credit and a tax deduction. Okay, so a tax credit allows you to reduce your tax liability dollar for dollar. For example, let's say that you had a tax credit worth $500. Well, if you had a tax bill of $1,000, when we apply that tax credit, it will reduce the amount you owe to $500. However, a tax deduction, it does reduce your taxable income. However, it does not reduce it dollar for dollar. So, of course, a tax credit is more advantageous to a tax deduction. However, a tax deduction still allows you to legally pay a lesser amount in taxes. Now, let's talk about what things you can deduct in your business. So, the IRS states that if you purchase things that are ordinary and necessary for your business, then you can deduct them with filing taxes. The thing is, what is considered ordinary and necessary? So, for example, as a trucker, things like your tarp that you may have to purchase, your supplies, your tools that you use, whether it be a EDL, things that you ordinarily and necessarily need to operate your business are things that you can deduct when filing your taxes. Now, there's a controversy of whether or not you can deduct things like your hair, nails, things like that. Okay, you all, let's be reasonable. So, in the event you are audited and the IRS determines that you have been deducting things such as your hair, nails, spa appointments, things like that, they can disallow those deductions and you would be responsible for paying back the money that you probably have received or the amount that you was able to reduce your tax bill. Keep in mind, whenever in doubt, ask yourself, is this something that a trucker would ordinarily and necessarily need to run the operations of their business? Now, when it comes to clothing, so let's just say, for example, if you purchase some uniforms to wear for your business or something that you wear only when you are doing business as a driver. So make sure that you brand your items. If you brand your items with your logo or your business, then that would be something that we can identify to the IRS that you are using, that's ordinary and necessary, for one, for you to promote your business, but something that you wouldn't normally just wear for personal use. So anything that is used for personal use would, in the eyes of the IRS, be deemed that you cannot write it off. So whenever in doubt, you all just ask yourself, is this something that I would ordinarily and necessarily need for my business? That would help you all make those determining factors of whether or not you should use your personal card or your business card. Again, you all, keep in mind, do not commingle your funds. Commingling is when you are mixing your business and personal income and expenses. In the event the IRS determines to audit you, they can disallow your expenses if they see your personal purchases in there. They can question whether or not they were really for business. So it's all about making sure you have your foundation solid so that you can take advantage of these tax deductions and credits. I am Keisha West, the Truckers Financial Strategist, and I help truckers to legally reduce their tax liability. I also assist them with having bank-ready financials when they are ready for that next big opportunity to scale their business. Make sure you all follow me here for more tax tips. Also, check out the link in my bio where I have free resources for